This is Alan Bush with the Daily Financial Forecast for Tuesday, August 2nd. Starting out with the stock index futures, we are under a little pressure this morning. Looks like some profit taking coming in after yesterday. We did see some new historical highs in some of the indices. Also, I think that there's a very good chance that we will see some recovery later this afternoon. Also, still thinking that the main trend is higher for all of the major stock index futures. And this is a trend that will probably continue at least through the balance of this year. Now, moving over to the currencies, seeing the dollar index under some pressure, not so much because of anything happening here in the U.S., but what has come out overseas. For instance, we did see the euro currency advancing after inflation in the Eurozone, coming in a surprising up 0.7%. That compares to the estimate of up 0.4%. So the euro currency advancing on that news, and actually that was way off the range of estimates for the most part. So inflation becoming, I think, more of a factor internationally, which we'll get into a little bit later. But that number is what basically supported the euro and put some pressure on the U.S. dollar index. Also, we are seeing the Japanese yen trading higher after economic stimulus announced in Japan, coming in much less size-wise than what had been expected just a week ago. In fact, the Prime Minister of Japan basically coming out with some numbers that were about 25% less than the expectations from last week. So less stimulus means higher interest rates in Japan, and higher interest rates translates into a stronger yen. Also seeing the Canadian dollar and the Australian dollar advancing. Some of this linked to higher energy prices, at least higher crude oil prices. But in the overnight trade, we did see the Australian dollar coming under some pressure after the Reserve Bank of Australia cut its key lending rate by 25 basis points to a record low 1.5 percentage points. Strong gains in the Australian dollar were generally unexpected. Usually a rate cut would tend to put pressure on a currency, which was the case, but only temporarily as the Australian dollar reversed and traded higher. This could be an indication that the crude oil market may be bottoming in here. As we know, the crude oil market has come under some pressure over the last month or so. But if the commodity currencies, the Canadian and the Australian, are performing much better than the news, that could be an indication that the energy markets are likely to firm in the near term. Now, moving over to the interest rate futures markets, a lot of pressure. Now, for the last couple of days, we have seen the 30-year bonds very much underperforming the news. For example, the rate cut in Australia should be viewed as bullish for the interest rate futures markets, and yet that was not the case. Could it be that inflation is likely to become more of a problem and investors are becoming maybe somewhat more aware of the potential problem that inflation could pose down the road? I'm thinking that could be the case. So in any event, the interest rate futures markets very much underperforming. That could be viewed as a sign of weakness. Now, moving over to the precious metals, good gains today. We continue to feel that gold and silver are probably the best longs in the precious metals or even in the industrial commodity sector. So continue to trade gold and silver from the long side. There's a lot left, I think, in this bull market in those two metals. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.